Hello dear friends, my name is Clive Thompson. I'm here to tell you the weekly financial market review covering everything which has happened over the last 8 days. If you like this type of video and you want to see more of it, please subscribe. So what's been going on in the stock markets and the world equity markets and the financial markets over the last week? Well, what I see, they've been demonstrating remarkable resilience with multiple asset classes reaching or approaching their 12-month highs. For example, the Nasdaq Composite Index is just 0.1% below its all-time peak, and the S&P 500 is 0.6% below its all-time peak. So what's been driving this? Well, we've had some interesting developments on the monetary policy side. For example, we've had Federal Reserve Governor Michelle Bowman now advocating for 3 interest rate cuts in 2025, and that follows the weaker than expected employment data last week. The primary driver of stock market rises has been the technology sector. So that's evidenced by the Nasdaq index, which is up 2.87% on the week. And last week we saw major technology companies like Nvidia, Alphabet, Meta Platform, all trading within inches of their all-time or 12-month highs. And why is that? They've collectively been coming out, not all of them, but those which have been reporting results from the technology sector have, broadly speaking, brought out strong financial results, and they're showing that the momentum into artificial intelligence continues unabated. Overseas, we've had strong markets too, with the Nikkei 225 index gaining 1.85%. That's also within 0.6% of its all-time high. On the precious metal front, we've had gold trading. Actually, the gold futures briefly touched an all-time high yesterday. That was Friday rather, of $3,534.10. There were some technical reasons related to tariffs and gold bars, which I'll come to, but the spot gold price was not far off its all-time high either. And reflecting that, the gold mining stocks are soaring. As an example, the gold mining ETF, which has got the symbol GDX, it's up 73% year to date, and the weekly performance on its own was up 11.65%. On the cryptocurrency front, we're seeing strong Bitcoin price demonstrating institutional adoption a bit here and there. So Bitcoin is close to its all-time highs. On the bond markets, we've had yields declining. That's also positive for equities. And expectations of central bank policy is shifting towards more and more towards lower interest rates due to concerns, if you like, I suppose we can call it concerns, about the economic growth slowing. So we've got to be quite cautious when we have such a big concentration of assets trading near their 12-month highs rather than trading near their lows. Just to sort of illustrate that, Bitcoin's 4.3% below its all-time high. Gold 1.2% below its all-time high, Nvidia 0.6, Nikkei index 0.6, S&P 500 0.6, and the Nasdaq index 0.1% below the high. So a lot of things trading very, very close to the all-time high. What's driving it? Well, we got this wall of money. People have got a lot of uninvested cash. They want to know what to do with it. They're afraid they're missing out. They're diving into the market. And what are they doing? They're buying exchange-traded funds. And whether they like it or not, those exchange-traded funds are investing in the index. And the index, of course, is dominated by the largest, highest market cap companies. So that, of course, continues to drive the valuations of these companies higher without much regard to economic fundamentals. So you can make your own judgment if the stock itself is over or undervalued. But if you're putting money into the ETF, you're kind of not really looking at fundamentals at all. You're just saying, I want to be in the market. So what else have we got to say? There was a bit of a interesting break. A groundbreaking paper came out of the Federal Reserve on August the 1st. It was titled Official Reserve Revaluations, the International Experience. And that was a discussion about the possibility of revaluing gold reserves and, or rather, looking at other countries which had revalued their gold reserves and seeing how they had accounted for it and what the outcome had been. So I just read you one line from that report. You can go and look it up on the Federal Reserve website if you want, but I think the interesting line is this. For the US, this would involve revaluing the government's 261.5 million ounces, troy ounces, in gold reserves, the largest gold reserves globally, from a statutory price of $42.22 per troy ounce to current market prices, which stand around $3,300 an ounce. That was I think the most interesting sentence. So rather than hinting at a revaluation at the much higher prices which we've seen suggested, in this case they're talking about a revaluation to $3,300, which was the price when the paper was written on the 1st of August. Obviously the gold price has moved somewhat higher now, but it does show that a revaluation of gold reserves must be one of the things which is under consideration. Now, this potential revaluation, if it was done at the price they suggested of $3,300, it would unlock $750 billion in value from assets which are currently valued at just $11 billion. So they look at all the international precedents where other countries have done it. There's countries like Germany, Italy, Lebanon, Curacao, I think I said that wrong, Curacao, and St. Martin and South Africa have done it in the past, and they look at what the accounting treatment would have been or was and how things worked out. Another development last week, not a good one I think, was the announcement of a 39% tariff by the USA on Swiss imports coming into the United States. That's of course a tariff on the US citizens who'll have to pay it. But of course, it's bad for Swiss business because they'll be selling less into America due to the higher prices which Americans will suffer. So clearly, businesses like the Swiss watch industry, for example, are going to suffer. Luxury watches, that would be. There's a little bit of wine being sold into America. And then, of course, we've got the Swiss chocolate industry. And last but not least, the Swiss precision instruments, which have always done very, very well because of the very high quality. So to what extent that will affect Swiss industry, we'll see, but it's obviously not good news. The other thing which perhaps we need to worry about, it's not such a large impact on the Swiss economy, but it is kind of important. One of Switzerland's biggest exports is gold bars, and the gold is imported from places like London, where it's 400 ounces bars, it's refined into 100 ounce bars, then it's shipped to America, where they use 100 ounce bars on COMEX. So technically, Switzerland's got large exports to America in terms of gold bars, basically refined gold bars. So the issue which came out late last week was the result of a question raised by a Swiss gold refiner as to clarification that Swiss gold bars were not going to be subject to the 39% tariffs. And the answer which came back appeared to imply that 1 kilogram bars and 100 ounce bars would be subject to tariffs. So the gold's on that news, gold futures in New York soared to a massive premium over the spot gold price as the shorts scrambled for cover, because many of the shorts would have had their gold in the UK And now they're thinking, oh my God, if I ship it to Switzerland, then refine it and bring it to the USA, I'm going to suffer a huge loss because of the tariff. So they scrambled to cover their short position on the futures by buying back the future. Hence, the future went to quite a premium over spot. Since that news came out, some US government officials have said there's misinformation and there's corrections needed. But as I'm speaking at just after midday on Sunday, there's no news come out clarifying the situation. So we don't know which way it's going to work out. Will gold bars exported from Switzerland be subject to tariffs or not? And of course, it's not just Switzerland. The tariff would be on the gold bars, not on Switzerland. So if the gold bars were being exported from London, it would be 10% as opposed to 39% from Switzerland. But of course, London isn't refining the gold bars, because what's needed in New York is 100 ounce bars, not the 400 ounce bars from London. So that's the question as to how things would work. It'd take time to set up refining facilities to manufacture a different type of bar somewhere. Also last week we had the news from Eli Lilly that their weight loss drug was likely, or in phase 3 trials, reducing people's weight by 12.4%, which sounds like the drug is working. Should be good news, but Wall Street didn't like that news because Wall Street was hoping for a 15% weight loss drop, and they only got 12.4%. So Eli Lilly's shares were hit very hard. They plunged 14%. But at the same time, a competitor who also have a weight loss drug going through trials, that's Novo Nordisk, on the news of Eli Lilly's, I'm going to say misfortune. It wasn't misfortune, it was good news, but the market saw it as misfortune. On the Eli Lilly news, Novo Nordisk, who make this competitor daily weight loss pill, they saw their shares jump 7.5%. So in a way, that just shows you the stock market. One company's bad news is another company's good news. If you don't buy from A, you're going to buy from C. So if you own all the companies in the stock market, you'll do what the stock market does. But if you can see the future and see which company is likely to be the winner in a particular product or service, well, you can play that one if you can spot the future winner or not. Palantir Technologies last week produced, on Monday this was, produced its first $1 billion quarter. It was a 48% increase in revenue, not earnings per share, 48% increase in revenue year over year. So absolutely amazing results. And of course the share price soared after those results. Not only were the results absolutely excellent, but they also increased their forecasts for the rest of the year. Now, I'd just like to give a little bit of a warning. I don't recommend any of the companies that I'm mentioning, and Palantir in particular is on an outrageously high price earnings ratio of over 600 times and several hundred times next year's earnings and the year after. So very, very expensive. Of course, it doesn't mean to say that this wall of money won't push the stock higher. That could well happen. But on pure fundamentals, it's a very expensive stock. Nvidia last week trading just 0.6% below its 12-month high of $183.88. It will report its earnings on August the 27th, towards the end of this month. And analysts are expecting a blowout quarter. And analysts are actually saying they expect 138% growth in year-on-year revenue. That's even better than Palantir's growth that we've just seen reported. Nvidia shares also on a very high price earnings multiple, and the share price is up some 34% this year. Another company in the news last week was Apple. Apple made an announcement that they would be investing $100 billion in America. In a way that might be showing that the tariffs are working the way President Trump hoped for, i.e. companies bring their manufacturing base back to the United States. Now, some skeptics would say, well, these are just words being used by Apple. There's no legal obligation to do what they just said. But of course, they are great words, and words which Mr. Trump must be very pleased to have heard. And of course, now Apple can be his best friend, and that might come in useful when it comes to import tariffs on the things that Apple uses. We'll see how that actually works out at the end of the day. But needless to say, Apple shares soared on the news. Apple shares, by the way, are just 2.7% below their 12-month high. We did have one little bit of bad news last week, apart from the Eli Lilly bad news, and that was in respect of Rivian. Rivian Automotive had their Q2 results, Q2 2025, on August the 5th. They posted an earnings per share loss of 97 cents. Analysts were expecting the company to make a loss, but they were only expecting it to make 80 cents of loss. So the 97 was a lot worse than analysts had been expecting, and unfortunately for Rivian, the share price plunged on the news. The company's forecasting that it will deliver fewer vehicles than previously forecast. So let's look at the Federal Reserve moves over the last week. We've seen in the week that Michelle Bowman has come out and said that she advocates for 3 rate cuts in 2025. That's kind of significant because it's a kind of a shift in central bank communications. Normally we only get to hear things from Jerome Powell himself, and now we've got one of the governors coming out in a dissenting position. She voted against the July policy hold, and now she's coming out publicly and talking about the growing concerns about the economic deceleration and the labour market weakness. So once again, it kind of plays a little bit to President Trump's hand, who wants lower interest rates. Not only that, he's got his successor being appointed into the Federal Reserve just last week. So that will be somebody who's advocating for lower interest rates. And we know that there's 2 dissenters out of the 7-person Federal Reserve Board. So that's 6 governors plus the chairman, Chairman Powell. So we now have 3 of those 7 definitely very much on President Trump's side. Meanwhile, in Europe, we've got the European Central Bank, which is still being very accommodative. It's had 8 25 basis rate cuts so far. The most recent cut was on July the 18th, when it brought the deposit facility rate down to 2%, previously 2.25%. So the European Central Bank is being much more accommodative than the Federal Reserve has been so far. And it looks likely that we'll have 2 further cuts from the European Central Bank before the end of the year, which would bring the rate down from 2% to 1.5% by year end. As far as the Bank of England is concerned, they reduced their rates last on the 1st of August, just a bit more than about a week ago. They reduced the rate by 25 basis points from 5% to 4.75%. The vote at the Bank of England was split 5-4, with 5 of them voting for that 0.25% reduction. In Asian markets, we saw strong performance from Japan, whilst Japan didn't really do much. So the Nikkei 225 index was up 1.85% on the week, and as is the case with many global indices, it's just below the 12-month record, 12-month high, I guess, 0.6% below that. So what's it reflecting? It's hard to say. I suppose it's reflecting economic strength, but it's a complex situation with Japanese yields rising, unlike the yields around the world. So bond yields in Japan are actually rising, and we may actually see interest rate, short-term rate rises in Japan. On the other hand, Chinese markets were much more stable. China did report a big trade surplus, beating everybody's forecast for the month of July. The reason for that probably is accelerated shipments ahead of the imposition of higher tariffs. DAX in Germany, the German DAX index didn't do very much. It actually declined 0.12% on the week, but it's still only a fraction below. It's less than 2% from its 12-month high. The FTSE 100 also declined a tiny fraction, 0.06% on the week, keeping it within 1% of its 12-month high, which I think is also an all-time high. I've mentioned that cryptocurrencies seem to be doing well, particularly Bitcoin, which has risen from about $112,000 at the start of the week to $117,808 at the time I'm looking at this. The peak a few weeks ago was 123,000 roughly. Looking at commodities, we've seen the WTI crude oil index, or rather crude oil, fall by 4.61% on the week, and 6.66% on the month, while Brent crude declined 4.42% weekly, roughly 5.5% on the month. Natural gas is down too. It's down 9.78%. Obviously, it's summer. The demand for air conditioning might be up in some places, but not so much in Europe. And obviously no need for heating at the moment. So that's perhaps what's happening there. Gold, as I mentioned, pretty close to the all-time high, about 1.2% below its peak. Silver doing very well, 2.2% below its 12-month high of a few weeks ago, which is $39.41. Silver's trading at just over $38 an ounce. Platinum and palladium are not up really on the week. So platinum was relatively stable over the week, and palladium declined very slightly. The reason given was reduced automotive demand. So where are we? We're looking at a lot of stocks at all-time highs, especially in the technology sector. A lot of those technology stocks look like they're on high multiples, which does mean that they're expensive, but it doesn't mean to say they'll go down. Of course, we've still got this wall of money trying to get in the market. Let's just weigh it up and put together a bull case scenario, a base case scenario, and a bear case scenario. I would say there's probably a 35% probability that this bull market continues onwards and upwards, with NASDAQ reaching much higher levels. My base case, which I'd say is perhaps 45% probability, I would think we'd have more of a range-bound trading around the current levels, but clearly good results will still drive some of the leading stocks much higher. But stocks are vulnerable to slight missteps in policy or economic stagflation, deflation or deceleration. So I'll talk about the bear case. I think it's not a high probability. I'm going to say it's about 20% probability. So if you want to sum that up, we've got about 80% probability of stocks trading within a range or going higher, and only 20% probability of them going lower. But obviously what could drive stocks lower very rapidly would be some bad results from one of the technology majors. That could impact things. But again, I say there's this wall of money, and as they say, do not fight the tape. So what have we got coming up? We've got the Jackson Hole meeting coming up in a couple of weeks. That will be an opportunity for the Federal Reserve to let the market know its views on the next interest rate decision, which comes up in the middle of September. almost certainly the signalling will be that we're going to get a cut. That's what the market's currently expecting. So I can't imagine that there'll be anything come out between now and then which doesn't, which change that. The only important bit of news which might affect things will be the inflation result, which is the inflation news which is due out next week. That could have an impact, but driving against that, we've got the seriously deteriorating labour conditions, and I think the Federal Reserve will focus more on the labour situation than potentially rising inflation. So, ladies and gentlemen, that's my summary for the week. If you've got any questions or comments, please feel free to put them in the comments below this video. I will try and answer some of the comments. I won't be able to answer all of them, maybe, or maybe I will, we'll see. And of course, I'm happy to answer any questions that you send to me on LinkedIn as well. If you like this and you want to see more daily and weekly reports about what's going on in the stock markets, please subscribe, and I'll judge whether people like this and want more of it by the number of new subscriptions. And of course, any likes or comments will help me make my judgment as well. So thank you very much, ladies and gentlemen. Thumbs up. Look forward to speaking with you on Monday morning.